reference number now for information concerning the financial fund's tax-free income shares. During the past 5 years, financial tax-free income shares has ranked number 3 out of 113 tax-free bond funds in total return. By investing in high-quality municipal bonds, this fund has provided its shareholders with a source of high current income free from federal income tax. While past performance is no guarantee of future results, the financial funds are proud of what the fund has achieved. To receive an easy formula that can determine if tax-free investing is advantageous to you, as well as a prospectus containing information on management fees and expenses, call 800-525-8085. Read the prospectus carefully before investing or sending money. The Financial Funds, investment professionals since 1932. Call now, 800-525-8085.
This opening portion of Market Wrap is sponsored by the Travelers. You're better off under the umbrella.
Good afternoon, everybody. Welcome to the Tuesday edition of Market Wrap. I'm Bill Griffith. Neil Cavuto was on assignment this week. Earnings reports once again dominated the news on Wall Street today, and the nation's biggest banking company was at the head of that list. Citicorp lost 53 cents a share in its fourth quarter as it continued to deal with problem loans and a restructuring. That figure included $654 million in write-downs for bad real estate loans. But it was boosted by asset sales.
Certainly perceptions have changed within the last month. Citicorp Chairman John Reed indicated in a preliminary release that the brackets in the fourth quarter and the full year 1991 should reflect an end to the red ink for the foreseeable future, and Citicorp should in fact turn to profitability in 1992.
Citicorp today down a half at $14 a share. Elsewhere, Wells Fargo reporting a huge loss of $4.59 a share for its fourth quarter, including a $700 million loan loss provision. And it says it may have to increase its loan loss reserve significantly in the future as well. Wells Fargo stock today near the close down 2 1/8 at $65. Shawmut National winding up on the plus side of the earnings scoreboard, although just barely. Shawmut has maintained that the New England economy's problems are bottoming out. That was one reason it gave recently for breaking off merger talks with Bank of Boston. Shawmut today finishing down 1 1/8 at 10 1/8. And Dow component United Technologies is taking a $1.25 billion charge against earnings and lopping off almost 14,000 jobs off the payroll. That resulted in a fourth quarter loss for the company of well over $10 a share. John Metaxas will have more on that story coming up in just a few moments. In the meantime, the stock of UTX was down 1 1/4 today at $54 a share. Earnings reports and profit taking way down Wall Street in today's trading. Let's look at the unofficial closing numbers from the day. The Dow Jones Industrial Average down about 30 points. We were down about 35, 36 points at one time today, closing around the 32.24 level. The transports are down almost 20, and the utilities average down 0.19 at 212.07. Declines beat the advances by a very comfortable 12-5 margin today, leaving 414 issues unchanged. And the broader market averages were all lower. The Standard & Poor's 500 index down 3.79. The American Stock Exchange average down 5 points. We should point out that NASDAQ number is rather, it's technically correct, but it's really incorrect because they haven't been computing NASDAQ's composite indices all day, essentially since 10 o'clock this morning Eastern Time, because of computer problems there. So when the computer went down at the NASDAQ today, that's where it was, but that's not really a true reflection of where the index is quoted on the close of trading today. Turning to the bond market, the weekly T-bill auction saw 3-month bills come in at an average yield of 3.78%, down 5 basis points from a week ago. And the 6-month bills came in at an average rate of 3.84%. That's down 3 basis points from the lowest rate we saw from the average rate of last week, and is the lowest rate we have seen since March of 1972. Long bond this afternoon up 11/32 at 105. The yield at 7.57%. Dow component Texaco says lower oil prices and weak demand scaled down its fourth quarter profits. Texaco earned $1.15 a share for the quarter compared to $1.40 a year ago, and the stock today was up 1 3/8 at 63 1/4. One of the few Dow components that was positive. Joining us now with his read on today's market action is Ron Hill. Of course, he's investment strategist with Brown Brothers Harriman. I want to start with the banks. Citicorp, obviously, something a group that you've been high on recently.
Well, yes, we've been kind of downplaying the money centers, obviously.
Yeah.
What we're hearing from the regional banks is that business is looking up. Remember, Boston, Bank of Boston and Shamit called off their merger talks because both of them saw their business getting better.
Things are doing fine. They don't need each other right now.
Things are doing better, so they're not as badly in need of each other.
Well, anything looks better at this point, right?
Right. But, of course, what sort of keyed the market sell-off today, I think, was the Wells Fargo announcement, pretty much in line with expectations for people who are specialists in the bank field.
But a warning that the loan loss provisions are going to even grow more down the road.
That's right. And, of course, Bank of America, Security Pacific have already announced big negatives for the quarter. Obviously, the California economy is nowhere near a turn just yet, and that's an important part of the overall U.S. picture. So that's part of the problem here, I think. That, we got a little optimistic, and you saw the cyclical start to run on the feeling that maybe this Fed discount rate cut was really going to push the economy forward. But look, money supply isn't growing. None of the things that are happening that need to happen have started to happen yet. So we still have a ways to go.
Do you think this cyclical play is a little overdone? I mean, all of a sudden we go from growth stocks, cyclical stocks, and we're off and running in that area.
Yes, and we also went from what was really expensive and had done very well, looking for whatever was cheap.
Sure.
And that was sort of a panic reaction as the market was running and people were looking, what can I buy next? My answer to that, yes, I think it was overdone. I still think good, solid earnings growth is going to be very hard to find in the market, and I think people will pay more for that. So I would counsel staying more on the growth side of things, and certainly the drug stocks and some of these companies have become much cheaper over the past 2 weeks here.
I'm trying to think of who it was, but last week one analyst had said that he felt since the volume was so heavy in the market, I mean, we were doing 250 million shares a day. We got into the 300 million share range. He felt that was the kind of power we have not seen to the upside since 1982 when the bull market started. Would you go that far? Is it that kind of power that we're seeing right now, a new leg in this bull market, do you think?
We felt that when you got that nice buying surge from the end of last year, you had a breadth stampede, normally gives you at least a 10% rise in prices. The signal came at about 3,200. I don't think it's the same kind of power that you saw back in 1982, simply because we're starting from such different levels. PE ratios were 8 then. Right. This time they're 22, 23.
Very high.
I think that, to be that aggressive is sort of foolhardy at this point in the market. It's true that, we're back to 1972 levels on Treasury bills here, and there's probably room for long rates to come down, and that'll be a nice boon to the market as well. But nonetheless, I still think, valuations are high. Earnings growth is obviously being postponed out into the third and fourth quarter of this year. Right. It's hard to get real super aggressive here.
Conventional wisdom says that this play in stocks lately has been an interest rate play. Fed drops the discount rate a point, up goes stock prices because suddenly you get a better yield in stocks than you do essentially in the bond markets. To put it simply at this point.
Yes.
Is another interest rate cut already factored into the stock market, do you think? Or if the Fed were to move again, not necessarily the discount rate, but bring the Fed funds rate down again and shift the interest rate mechanism one more time, could we see another pop in the stock market?
I think so. I think you keep seeing liquidity come into this market. Low rates are virtually no competition for stocks, because the cash return is so low. So I think that, the potential, as long as you think there's going to be capital gains achieved in stocks, it's worth it to be invested in stocks. You go to cash only when you think the market's about ready to collapse. I don't see anything out there that spells, a significant drop in stock prices.
Okay, but in the meantime, am I hearing you saying that if you're not there already or if you've got new dollars right now, be a little cautious here?
I would be cautious. I would look for earnings growth as a major criteria for investment. And I think, you have to be very careful on the cyclical plays. Stay with the early cyclicals, some of the newspapers, some of the housing stocks perhaps, and some of the wood products companies, because they'll benefit from an uptick in housing in the spring.
Got it. Thanks, Ron. Have a good week.
Thank you.
Ron Hill, and Chief Investment Strategist with Brown Brothers Harriman, joining us as he does each Tuesday at this time. When we come back, hear more earnings. Payne Weber reporting record profits, and the takeover battle for French bottled water giant Perrier heats up. That and more when Market Up continues.
Partners for Business Insurance carry a 127-year tradition of excellence, upheld by 35,000 employees dedicated to customer satisfaction. Chosen by 50% of the Fortune 500. Open in case you want quality and service the traveler's way. You're better off under the umbrella.
Where would the African elephant be today without cable? After viewing a Discovery Channel documentary on the slaughter of African elephants, delegates from 103 nations enacted a total ban on the sale of ivory. Cable contributes to life.
I have this dream. I ride 190 horses at once.
You're under arrest for contracting without a license.
It's a tunnel. Just call.
So we decided to look into it. We will lose lives.
If it sounds too good to be true.
Deals and Deals, only on CNBC.
Production is up, consumption is down, OPEC is stepping in. What's going on in the oil business?
Who's going to win, the people at the pumps or the stockholders?
Join the Dolans for the oil picture. Smart Money with the Dolans, 6 and 10:30 p.m. on CNBC.
All right, welcome back. Before we check on the rest of the day's news, let's see how the major market numbers are settling out. A bit of a down day on Wall Street. We're settling down about 30 points at the 32.23 level. Transport's down 20 at 1391.07, and the Dow Utilities average almost neutral on the day on the close, down 0.07 at 212.19. Wall Street firms continue to turn in banner earnings reports. Payne Weber Group reported